Welcome to the Crypto Compliance Podcast by Gatenox.
Welcome in Crypto Compliance by Gatenox, where compliance experts and practitioners are talking about current market events and general compliance aspects. My name is Paweł Kuskowski, and I'm hosting this show. Today, we have a special guest, Georgi Kocigarovas, designated partner of the PCP Lab compliance consultancy firms from the UK. Georgi has extensive experience in setting up compliance programs, working with crypto businesses, e-money licenses, payment companies. In this episode, we spoke extensively about practical tips on how to set up compliance in an AML program, how to choose tech providers, differences between licenses, transparency, international publication on compromised crypto accounts, UK regulatory regimes for stablecoins. In crypto compliance, we promote the highest compliance standards in crypto, bringing interesting topics and talking about practical issues. I would like to ask you to subscribe to our YouTube channel, leave your comment and share it. Let's together promote compliance culture in crypto and Web3. This podcast is sponsored by Gatenox. Gatenox is the fast network and tailored corporate KYC solution. With Gatenox, you can onboard corporate clients, but also individuals, and check the source of funds for the clients by working in a trusted and compliant ecosystem with Web3 capabilities. Please also check our website, gatenox.com. Thank you. Hi, Georgi. How are you?
Hi, Pavel. All good. How are you doing?
Very good. Listen, I think, we just discussed, a very interesting topic from the compliance perspective, which is the Transparency International announcement. Mm-hmm. And considering your background and your experience, which I'm, very much surprised, of the quality of the compliance understanding that you provide. And this is, when we met actually on one of the mutual client, and we discussed, the compliance aspects with the client. And suddenly I realized that Georgi knows his stuff very, very well. And I think, your experience will be very interesting and very critical. Mm-hmm. And the subject which we just discussed around the Transparency International paper about selling cryptocurrency accounts.
Yeah. So money mule accounts.
Yeah, exactly.
Yeah.
Can you tell me more about this?
Yeah, Paul. So first of all, thanks for kind words. I can only, accommodate yourself with saying the same about your experience. And, it's a really pleasure to have myself here on your podcast. And, let's without further limbo jump into discussion of this interesting topic. So, Transparency International report on money mule accounts in cryptosphere. Which was, published just recently on last Friday. I was reading it, and thinking like, wow, how did that happen? We're speaking here all the time, about how crypto is different, how you can, establish the seamless onboarding, seamless approach while still mitigating risks for, all of the parties involved. And here we have, investigation of Transparency International into money mule accounts that are being sold to Russians in order to evade, all of the sanctions which are imposed on them. So that report, that was, something really interesting, because you could see that there is really a black market of accounts for, verified accounts with such exchanges as Wirex and alike. And mostly that specific report was speaking about Wirex, but you saw, that there is that thriving market of accounts being sold, and not by single account, but, in some cases, you could go to Telegram, you could find a bot and order around 60 accounts from, a single person. And imagine one account, okay, it has a limit of, let's say, 1,000 euros or GBP, right? But it's still a substantial sum. And daily it could be sold by 60. By and just from one bot. So in essence, you could have that ambience of accounts which could be purchased in order to do transactions and evade sanctions and launder money. And most importantly, you have different kind of aspects. So you have two types of accounts which are usually sold on that marketplace, on those marketplaces, and they are either European accounts which have access to cards such as Visa, MasterCard, and which allow you to participate in card schemes. And for Russians, that is paramount following, the invasion of Ukraine, and Visa and MasterCard pulling out of Russia, and, all of the services which require a card will not accessible to Russians. But with this type of approach where accounts are being sold, you can actually utilize that. And,
so
the second,
let's,
yeah.
let's break it down, because I mean this problem is well recognized in crypto. It existed also in the traditional finance. I think the difference is that the scale of the problem is different. So the traditional finance, it's not so easy to find the market when you can buy I don't know, ING or Citibank accounts of individuals which you can use, you can access and make transactions out of this account. It exists, but the market is much smaller in crypto, and that's what we knew this for many years. But I think that the size of the problem is actually increasing significantly, and the market is becoming more and more active, which is like the existing accounts with some history, so already KYC'd, already reviewed, already approved, already opened, handed over to someone else, to third party, who is actually using as private account under different name. So that's something which is effectively wouldn't be picked up, or would be very difficult to pick up by traditional, let's say, identification providers, because you can have very similar IP, very similar location. I think you can buy also, let's say from the same country or from the same region in the easy way. So you're saying that it's Telegram where you can buy it, and it's very difficult to recognize that the pattern is changing, right?
Yeah, but funny enough, those accounts and, overall, this type of marketplace is really thriving for Russians. So here you have, that possibility of tracking, monitoring IP addresses, right? They even allow to change the numbers. So, for me, it remains a mystery how, you can have so many red flags, like changing IP address of, let's say, person traveling to heavily sanctioned country, change of a number, right? And instant activity on the account, because some of those accounts are just, empty accounts, shell accounts, if we say so, which were, verified, KYC'd, and afterward passed on to whichever, third party who wanted to buy that account. So you have that kind of element. And, for me, it's just surprising how it can happen, with all of the controls, which both me and that are right now in the market. So it's either, overwhelming reliance on, traditional rules monitoring, or not even enough of monitoring of the customer activity, which is falling outside of, traditional pattern monitoring.
Yeah.
So you have those, two aspects, but just the sheer scale of it, and, possibility of basically purchasing an account in the name of another person, afterwards, doing crypto transfer of funds, which are pseudonymous in some instances, depending on where it comes from. You can have really a perfect, so to say, laundry for whichever funds which you have, because actually, it's really difficult would be to trace whatever there is, because you have those people who are complicit, so money mules who are complicit and who are selling those accounts, who are passing KYC, and who are being still on the support line for those who purchased those accounts. So in case of,
how would you, set up compliance program which would pick this up?
From my side, compliance program which would pick this up, it would require, monitoring on the activity of the account. So, any kind of events such as change of a phone number, of course, IP monitoring, right? And at the same time, review of the activity on account via probably also, artificial intelligence, because apart from traditional like rule monitoring, right now you have quite a lot of providers who are offering AI systems, which are, trying to detect whichever activity which would be falling outside of usual, activity which is expected. At the same time, if you engage the AI monitoring, you can see patterns of, multiple accounts being utilized and, let's say, doing transfers to the same beneficiary, right? So you could be noticing those types of patterns. And therefore, I think like the most important things would be IP monitoring, monitoring of account activity in relation to, change of the number or any kind of login credentials and etc. So as a must, if there is a change of the number, the account should be subject to closer scrutiny to review it for whichever activity which is coming afterwards, and whatever it adheres to whichever activity which was before that. And basically, doing those additional steps. And interestingly enough, it's not only, what I'm coming up with right now, it's what Transparency International wrote in their report as well, because they had actionable steps which we advised entities, subject to money muling to take.
Do you think they are practical, the Transparency International steps?
From the perspective of...
Or they're high level?
Very high level, and on the practical level, it's still more on the fine-tuning and on the setup of the systems and how to actually implement that. At the same time, let's not forget, you have also limitation of how many people you have in the compliance department, and what kind of workload and what kind of alerts are considered higher risk, and which should be resolved. So you have those aspects, and you still consider, resource prioritization, how to go around those issues when, let's say, everything is below the limit. And with those accounts, mostly that was the issue, that everything what was happening was below the limit of 1K. So in essence, I'm not saying that I know ins and outs of systems and how they're set up with Wirex, but I presume all of them were de minimis. But because of the scale of, accounts being sold in hundreds, yeah, it's an alarming issue. And how to go around it, right? It would be probably, a bit more due diligence on the gateway. Instead of, just collecting the bare minimum of information, do an extra step, collect extra information, ask extra questions. And, that's the same as in crypto, the same as in fintech, like with our PSPs, quite a lot of reliance is on the bare minimum KYC, CDD, which is done initially, and afterwards you take on monitoring. And you onboard, thousands of people, and you need to monitor all of them. So here you can have an issue in relation to, how well you apply the monitoring exercise and how well you establish rules and procedures for that sake.
And I think, another aspect which could be applicable here is to use blockchain analytics, which is kind of the additional step which you wouldn't have in traditional finance, yeah, right? So the connections, I wonder, like just thinking out loud, I think, CoinFin would be providing this type of understanding, at least, at some point. There was definitely consideration. I'm not sure if someone else is is doing this, so kind of seeing the connection at the, on the crypto level, even if this is farther away, to see that there is actually the same kind of distribution channel happening on the crypto side. That's something that is not accessible in the traditional payments, let's say, sector, right?
Yeah, that's completely true. But also, there is that thing that criminals, were as smart as know as well sometimes, prevention measures as we do. So they can utilize also, techniques to like mixers and etc. to, a bit to throw us off a trail. And, it's difficult with providers as well, because I know that in some instances, I believe Elliptic was advocating that, they can track funds through mixers and etc. But that's not true up until today, in my recollection, at least.
CoinFin is doing this, so that's.
Is it 100%? That's the
100%. Yeah.
So you can monitor whichever.
Life. Yeah.
So you can monitor whichever mixer, and it's regardless of, there is still that element that, how far you can go into actually seeing and tracing all of the funds.
I think, you can go farther than you would expect. I think that there's the market. The question is, there's other, so it's almost like you have the tooling, but you have information, and then what you do with this information. And this is where is the breaking point, right? Because if you go this to the regulator, right? If you report this, there's almost nobody who is able to understand what's in reality is happening. So it's slightly pointless in this context to kind of collect this information, because then it's becoming useless. And then it's something, but I know from the market for the fact, that funny enough, many companies would say like, oh, we don't want this robust tooling, right? Because then we discover something, but we have a problem. Nobody understands, how to solve this problem. And then, we have another step, and that's something that is probably good to discuss with you. How do you see the market, let's say, approaching more and more sophisticated tooling? Because I think we are reaching the point when the tools are so sophisticated that nobody understands why they should be using this, because there's nobody kind of prepared to understand this information. And there's always the fact that you will be blocking certain clients which your competitors wouldn't do, right? And that's something that is, it's really tricky where to strike the balance. But we can come back to this, and I want to ask you the question around your approach to setting up the compliance program, and to set up all this, let's say, tooling around this, which I think is critical and becoming more critical. And we see this under some mutual cases where it's not so easy as you would expect. It's quite opposite. In terms of, so I think the Transparency International paper is very interesting, and it's definitely gonna bring some ammunition for the regulators to kind of throw back to the crypto businesses. Another aspect is, I think, which is some good news. The Financial Times have written that the Bank of England and the FCA, the UK regulator, would bring stable coins as a payment option for goods and services, right? So which is quite new topic. It just published 2 days ago. What's your view on this, and what's the details are saying?
So in relation basically to utilizing stable coins as a means of payment, from what I gather so far, and as you said, it's only 2 days ago, and I literally read it just in the morning, in the broader sense, what the regulatory authorities in the UK are trying to do is basically they're trying, to establish a concise framework and rule setting for stable coins denominated in GBP. So those which are, systemically important to United Kingdom as such. So, the smaller stable coin in GBP, which is, outside of, I don't know for what reason you need to have outside stable coin in GBP, but outside of the United Kingdom, it would not be falling because, you would not have so many transactions in it. But this framework is really for regulating, those stable coins, which pose prudential, and systemic risks to United Kingdom as such. So let's
pause on this. Let's maybe explain to our listeners why we believe, why this topic is coming up, right? Effectively, what could happen is that Binance could issue token coin, which is pegged to pound, and effectively become slightly the central bank issuer of the pound for the economy, right? So suddenly we can have stablecoin, which is outside of control of the government, with the printing machine, from, I don't know, Singapore, Hong Kong, or China, and then we have which is. We see this already in the US dollar pegged situation, right? But I think the US dollar is simply as so big that it doesn't matter for them. But for pound, it actually could matter.
Yeah, so I completely agree with you on this point. It's really about protecting sovereign pound, so to say, because you have those ambitions from Bank of England to issue central currency digital pound. They want to have their own CBDC. So whichever big stable coin denominated in pound could pose a threat to them, because you could have settlements in national currency outside of the purview of clearing systems of the national bank, and you have national clearing schemes in the UK, Faster Payments, BACS, CHAPS, they're operating. And if you create an hour system denominated in GBP and all of the transactions and settlements in the national currency would be falling outside of those systems, it poses a threat, because how you actually can monitor and supervise stable coin clearing. So it is, this proposal is exactly to avoid this type of situation, and emphasis in it is actually in catching those stable coins denominated in pounds, which are actually posing systemic risks to the country. So they just want to have a control over national clearing and national currency in order probably to have the more stable economy, because that's again a threat to the economy. Because how you can ensure that you remain in control of your economy if you cannot retain control over your own currency. So in essence, that's the issue which I picked up, just reading for today in the morning from the paper on, stablecoins. And that's what they're trying to do, because you're going to have separation, those which are strategically important and which are not. And those which are not strategically important, they won't fall under the purview and supervision of FCA and PRA, because, you're going to have double supervision for both those who are issuing, for those who are issuing strategically important stablecoins denominated in pounds.
Yeah, and I think there's another aspect to this. There's some, I think Gibraltar was thinking about, issuing pound, which would be 1-to-1 UK, but it's outside the UK actually, right? Which is very interesting aspect of let's say sovereign decision-making process, right? And then another aspect, another interesting project you have down from Isle of Man, which is the private company issuing, token which is pegged to pound. So that's another kind of spin to this. So not only big players but smaller players, everyone can issue right now the token, which would say it's 1-to-1 to pound. And what we see from the market, which is quite surprised for me, seeing that USDT is still much more popular than USDC, which doesn't mean that when the government will issue stablecoin, or CBDC, is going to be more popular than, let's say, Binance or Bitfinex pound. So it's really interesting, and then I don't think people were thinking about this type of risk. I remember down when I went a couple of years ago to Nigeria. In Nigeria, there was definitely let's say they understood the risk of crypto in the sense that capital will be flying away from Nigeria without control.
Yeah.
So that's something which is kind of indicator where the governments would be struggling. And then when you connect this with the Transparency International, when you can buy and sell accounts, then we have perfect, money laundering machine outside government control.
Yeah, and also interesting point which you noted about Nigeria, and overall a very love story, so to say, with USDT, because you probably also are aware, of the currency exchange controls which are very locally, and per se there is a difficulty, for the locals in Nigeria to do transfers outside of the Nigeria. So you have quite a huge market there for crypto transfers against Naira and back and forth, So you have dollars, somebody wants to send dollars to Nigeria or vice versa, but you have currency controls, which you cannot overcome otherwise. So locals, what we do, we quite often rely on USDT or other stable coins, so there is that issue as well in relation to, how people are utilizing basically cryptocurrencies in order to, circumvent, so to say, even, the traditional financial systems. And in essence, the same could be transposed into any other country. So, there is also that risk that whenever there's going to be, a stable currency, which could be, flying from one to the other jurisdiction, it could pose quite a big risk to the national economic system. And with, what's happening in as well Nigeria right now, with Naira losing its value, I guess that there was some implications which were brought by USDT and exchanges against Naira in the black market, so to say.
Yeah, definitely. And coming back to your, let's say, bread and butter, so the compliance framework and compliance AML, let's say, experience. You've been dealing a lot with e-money license clients, right? And payment client, and also the crypto clients. How do you? What's the, let's say, your standard approach when you advise client on setting up the right framework? So what would be your, let's say, first approach, and how you work through this?
Very interesting question, and as probably each law-educated person would say, it depends. It really depends on the size of the firm. It really depends on the knowledge of the people who are engaged in, etc. So there's quite a lot on which it depends. And the first thing, let's just tackle one by one. So first thing is really actually to understand, the depth of the knowledge of the people who are, who going to be responsible for the framework. And whenever there is anybody at all, because sometimes, you have visionaries who come, who want to get framework and everything, and afterwards we recruit people. It's like more of an afterthought. So if we're speaking about full setup, so greenfield project, nothing is there, and there is just that, consideration. I want to build this business. Tell me how to do it. It's actually gonna come down to evaluation of the business and understanding what the business is about. Typical clients, expected activity, seeing what we want to do, because each business is gonna depending on the client base, depending on the regions of operation, depending on the payment methods and the services which are being offered, it's gonna have different risks. So first and foremost, it's important to understand what actually the client wants to do, and how and what we expect the activity of the client is going to be. So we go and evaluate how it will look like, and afterwards, we start to already design the framework around, whilst choosing, appropriate systems, appropriate, controls which should be implemented. And really, the most important part, in my opinion, is go to the nitty-gritty of detail. So understand each step, let's say in the customer onboarding flow, each step, what client does, how we do it. If there are systems, how the systems look like, so doing demos of the systems, telling them how to design better the systems, and etc. So it's really going up to each point of detail, so you would have complete understanding what's going to be, the client onboarding flow, and afterwards client ongoing management.
So, and typically, would you go through the discussion with the client, or would you see the process map? I mean, it's probably going to differ when you have different clients in different stage, but let's assume we have someone who is knowledgeable and they already know, how the process and the system should look like. And, that's one question, so that's, is this conversation or more typically going through the process? How you go about the different licenses? Because I believe, one of the problem which you probably can encounter is whether this is crypto license, whether this is EMI, whether this is payment license. And in many situations, I believe you are very, let's say, it's very close to, almost like switching one functionality to another, right? Like, oh, we are EMI, but we hold the client assets. So effectively we are payment processor, but we do this in crypto. So it's like, it's a crypto license, like how you go about this problem? Because that's always, I think it's, so many times it's kind of simplified, especially when someone is saying like, okay, we want to do just crypto, right? But then they turn out and they say like, yeah, but we also want to do the fiat, right? A little bit, just to kind of, and then you have, or we're going to be holding assets, but just for a couple of days, just to settle the account, right? So how do you go about these different approaches?
So in relation to, actual licensing and types of activities, it's really goes to the nitty-gritty of detail of the payment flow. So usually we ourselves, we receive feedback from the client, what we want to do. And depending on our understanding, we ourselves do the payment flow. I'm not per se at PSP Lab, I'm not per se, responsible for operation management and etc. I have quite experienced partners who, worked as chief operations officers in NASDAQ listed companies, fintech companies. So we have quite a lot of experience, in that regard. But generally, we break down, everything to the steps. So at which step, what kind of currency or cryptocurrency is being held by client. And when you outline all of that, you outline together with that all of the parties which are involved. So let's say if there is like crypto element, is there an omnibus wallet somewhere with an exchange? What's the role of that exchange? At the same time, if we're speaking about fiat, who is holding fiat, in whose account the fiat is, and you outline all of those aspects, with that in mind, you afterwards advise client on how it goes around. And if we would go, to the distinction of payment and e-money, that's quite simple. Payment institution is, any institution which acts on basically pre-submitted payment order. So there is no element of holding funds on a prolonged period of time. An e-money institution is actually an institution which receives funds, right? And which issues to the customer a claim on the e-money issuer. So in that case, if we're speaking, about the distinction, it's actually about what kind of activity is being provided and what kind of services are being offered. So that point is simple. The probably, nitty gritty and difficulty which you can find here is if we would be speaking about stable coins, right? And about e-money. And right now, also interestingly, there is that distinction that like what is stable coin and what is e-money. So stable coin is like tokenized, on the blockchain, et cetera, et cetera. So there is that element of the technology, which you have. So e-money per se, e-money is in itself, as I like to call it, a legal fiction. So it does not per se exist. It's just a claim on an issuer, which is being shown in, let's say, your, Revolut account, if you're in the UK, because we still have, e-money license there. So you have a balance, which is being shown to you, which you know that you have, and that's kind of e-money on which you have claimed. And it's in purest sense, it's a legal fiction, because e-money actually, when the legislation was being drawn up, it was considered for prepaid cards. It was considered not for the same things as we have right now. It was not, nobody was thinking about banking as a service. Nobody was thinking about, those agents, distributors who are acting under the umbrella of regulated institution and utilizing sub-licensing, so to say.
For many years, EMI was almost dead license, right? It's like nobody was applying for this. I remember, I think 5 years after this, there was 2 licenses. One of, was Belon, I think, at that point of time. 2 licenses EMI from the UK, and then suddenly, there's like, explosion, renaissance of EMI. And I think, many situations connected with crypto, one way or another. Maybe also with the bank as a service, that's something which is definitely expanding. Another, just to pick up on another, just something came to my mind is like the license and then sub licenses, or the license which is given to third party. That's how you can go around this. Like imagine being regulator, which is like strained in terms of resources, and to try to make something out of this.
So banking as a service is something, I'm looking just at it, and I'm being quite appalled, to be honest, with whatever is happening there, because I know quite a few providers, and we know what's happening in the market right now. Like back in June, Rails authorization in Lithuania got pulled, PayerNet one. Their subsidiary right now, Modular in UK, got restriction on onboarding any new clients up till first quarter of next year at least, because we're being monitored, so we cannot onboard any new agents, any new distributors, and you have this type of banking as a service, sub licensing, etc., being as a really hot topic and in the purview of the regulators. So from my perspective, regulators, they did not consider all of the risks, which existed there. And it goes really back to Wirecard, which had all of the card programs. But after having conversations, with MLRO at the time responsible for transition of Wirecard's portfolio to basically to PayerNet, I got understanding, that there was no visibility of end users, payment service user whatsoever. So in essence, you had a portfolio of agents and distributors, which did not share end user, payment service user data with the principal. And funny story was that one of such providers got busted. so went into administration, and you have identity verification service provider, which holds all of the records on the end users and clients, right? And you have no third-party pass-through agreement for the principal to have access to basically to the information which is being held by identity verification provider. So you have principal who has quite a lot of clients, which are not IDV'd, which are not KYC'd, and they have no information whatsoever about them. And they have balances, and if you're EMI, you must hold balances for 6 years, even after closure of the account. So imagine what kind of level of headache we had at that time when, this banking as a service, this, agency and sub-licensing model came into life without appropriate controls.
Yeah, I think it's completely, it's such a complex area. It's becoming more and more complex, right? And it's like, then you have the embedded finance, which is, another aspect, which is kind of, not recognized properly. And then you have a crypto. And it's really becoming big topic. Coming back to, so once you, let's say, identify the process, right? What are the next steps? So you say that let's say we have a client, they want to, or they have already system not yet prepared to launch. What are the next steps? It's, you understand what they plan to do, how it's connected. What's your next step? Policies, procedures, understanding the system flow.
So it really goes hand in hand, to be honest, because I can do a draft policy and draft procedure, so to say, and I like to call them manuals, not even nor policy nor procedure, but rather manual, because I like to put that level of detail, so it would be understandable to simple analysts who are gonna look at the policy, what kind of steps must be taken by him, her, at whichever time and point in time. So in essence, we work normally quite closely with clients in relation to the systems, how we can be set up. So it's a bit back and forth. So they show whatever they have, and I say what we have is okay or not. And afterwards, we start to look how we can improve it. Either, whilst utilizing their own IT development team, if they have such, in order to enhance whatever there is, or by going, to outside providers. And we also, quite often I'm engaged with, those third-party providers who are either doing, transaction monitoring or IDV, liveness check, sanction screening, and etc. And either I, take client by the hand and lead them to whichever provider, show like what they have, and client, either likes or dislikes whatever they have, and we decide how we go around it. So in essence, it's our mutual effort where we really work on the, on the systems which should be implemented. At the same time, you need to understand that, I come from business prevention department, and client wants to build business. So there is also back and forth on how robust the systems must be, how much you need to actually implement. And it goes back to whatever you have said already about, about systems which are being built up. It's not as easy to push whatever you want from the compliance perspective to the business, because business always wants to do business, and we want to have the bare minimum in most instances, which are needed to protect them and mitigate the risks. So it's risk setting exercise and balancing, which you actually need to establish. Because of that, we outline quite often what are pros and cons, and sometimes we even do a table, like if you do this, it's gonna be, if you do A, it's gonna be B. If you don't do A, it's gonna be C. So we outline, all of the possibilities which clients have, and they decide how we want to go around. So they can decide, how well the compliance systems could be cooked, medium rare or what. And there is that element of discussion, and there is that element of, us even educating clients in relation to what must actually be implemented. And it all boils down to, trying to reach a consensus in relation to how well the systems should be set up and how robust they should be. And, probably one of the arguments which I like the least when it comes from the client, when they see some crazy exchange, doing God knows what, and they're like, but everybody's doing that, and you're like, guys, but like, you should not be concerned with whatever, somebody is doing. And, with the crypto sector and the fintech sector as such, as a whole, you have still that a bit of a cowboy mentality and Wild West mentality, which is only right now coming to senses after some interventions all around the globe, like both in US, in Europe, and UK.
Do you see crypto, let's say, market as mature enough to understand the risk? Because I remember, dealing with. I mean, I've been also, for many years advising or engaged one way or another in the payment sector, right? And then move to crypto, let's say. And I think the level of understanding of regulations in crypto is higher than in payments. It may change, so do you see the change? I mean, it's not to say that they are more willing to comply. That's a different question, right? But it's more to understand, okay, I need to do, KYC, ID&V, KYB, transaction monitoring, source of funds, blah, blah, blah. With payments, historically, it was like, do I need to do compliance? I don't want to do compliance. What can we do actually not to do anything, right? So do you see this shift? Or do you see this comparison with payments and crypto sector? But crypto sector is kind of more aware of what's required.
So I think there are a couple of dimensions to this question and to actual reality, because whichever truth which we have is subjective. So let's start with that. And with payments always were they were at least positioned as a lower risk than, let's say, banking and complex products and etc. So they were positioned as lower risk, and at the time when all of this fintech boom started, it could be considered lower risk. So you had exceptions. You had that light touch approach to compliance. Yes, there was that aspect, but at the same time, you had quite many shady people from traditional finances, who were coming into this sector because of that light touch approach, which was allowed by regulators at that time. So
we could name a few. I believe in them.
so some cases definitely, but let's go without it. So in essence, you had that mentality, and you had those market entrants from the traditional financial sector into payments, which were doing the bare minimum which was needed, and sometimes they were trying not to do the bare minimum which was needed. Whereas with crypto, it's a bit different, because whilst in payments and e-money sphere, it's always where ex-bankers and etc. who were building payment gateways, building e-money institutions and whatnot. In crypto, you also have quite a lot of tech people. So IT guys who have an idea, who want to build something. So when they come to to the regulated sector, they have no understanding whatsoever what is regulation, right?
Okay.
And we personally have projects where we have a strong IT team, and we can have just one guy who had some kind of knowledge in investment banking some years ago, and he was not up to date with whatever developments which were. So you have actually that void of knowledge in relation to whatever is expected from regulatory standpoint. And actually with crypto clients, if we're coming, let's say, from IT sector, I see quite a lot of willingness to learn, to understand what's regulation, how to go around regulation, and actually what they must do, in order to implement the systems and controls which are needed to mitigate risk. So there is that dimension. But at the same time, you have the same traditional bankers coming into crypto. And when that happens, that's even worse. Because, if we were coming, to traditional payments, e-money, that's an already regulated sector. But if we were speaking about, those shady bankers coming to crypto, they're coming because of unregulated nature of crypto. They are not coming because of technological developments. And in that instance, it's, the worst mix of both, so to say.
True, I completely agree, and I think for this case, when the bankers come to crypto, you would probably not have. I think from the tech, when you have tech people, they would have like perfectly written the process flow, right? Entry, exit points, entry points. So all this exists. So at least you have something to look at. I think with the business people, it will be like, there is something, we want to do this and this, but do you have like process flow description, detailed, how the tech works, screenshots and all this stuff. Not there yet, right? We buying license of someone, right?
Yeah.
And I think this is something that it's kind of interesting. Coming back to, so when you look at the system providers, right? And I know that you have quite extensive view on the market, what's available there or not. What is critical for, when you say, okay, this is good service provider, what are the critical elements from your perspective for this? I think, the service provider market right now is huge, right? And one of them, GateNox is one of them, obviously, right?
Yeah.
But, what's the critical elements you would be looking at?
So again, it depends, as always. It depends, on the business activity of the client and what kind of services they need and what kind of functionality they need. I'm not, for, let's say, killing a fly with a bazooka. So I don't think that, you will need a comprehensive, let's say, transaction monitoring solution if you have one built internally.
Yeah.
So it really depends on what are the requirements of the client. So first and foremost, we look at what client needs, right? And afterwards, depending on the client needs, we do the scoping. And we decide on, depending, on what are the needs of the client, what kind of solutions could work better. So easiest example would be, with IDV provider. So you have quite a lot of those who are doing, right now identity verification, and depending even on location of the client, you may have one or the other which going to be better. So for instance, in Germany, you have a requirement that during remote onboarding, you need to have somebody from the side of the authorized institution to be present during that onboarding. So in essence, you don't have you have quite a lot of those who are offering automated services, but you don't have that many who are offering as well like customer supervision. So you will be looking at that specific aspect depending on localization. At the same time, in some countries you may have automatic onboarding depending on the nationality of the clients. So there is, that open banking utilization in order to pass right now the KYC open in the UK, and you can utilize that one. At the same time, there is, in some countries, there is electronic register. So some providers have connections to those electronic registers and can pull data directly from from those registers. So it's really, what are the needs of the client and what is the best solution to the market of the client, whilst having in mind, overall setup of the client. At the same time, you always want to ensure that, the provider, which is being offered to the client, is, just somewhere in the middle, in between the providers. So I really like to go, for those who have really a comprehensive solution, who are in the market for already quite a bit, and who have good understanding of regulatory compliance landscape. Because if you have that mix, you can be sure that, you won't have that many problems with a provider. So I may be, a bit skeptical of most of the newcomers who, are not tried and tested by time at present. But that's going to ensure the operational stability of the client. And at the same time, you need to do, if you're doing counterparty risk identification and you're outsourcing some of the key functions, such as transaction screening, IML, CTF, you need to ensure that there are measures which you will take into account in order to maintain operational resilience and stability. So because of that, you need to do still identification of all of providers who are present, and it's also up to the fields of the client, who we like the most, because still you have a human element and human interaction with one or the other provider, and price considerations as well.
Yeah, no, I completely agree. So once you have. Then once you identify and you talk with the client about the service provider, do you come back and change the policies, procedures, to kind of reflect what in the system, or
I don't finish policies and procedures to such point as to change something. I leave it blank. So I leave those parts blank actually. And depending on the capabilities of one or the other provider, I fill in the information afterwards. because I'm not a fan, of changing things and redoing stuff. So I do it only if necessary. And mostly I like to go, step by step with the client. So I tell them like, okay, now we need clarity in relation to like how we want to set up systems. So let's go and see providers. We go see providers, we come back to the drawing board and we draft whatever is needed.
Yeah. And then, what would you let's say advise new person coming to existing, company, let's say new head of compliance or new head of AML or MLRO? What would be your advice when new people are coming? Like, my typical advice would be, first go through your employment contract.
Yeah,
right? This is important to understand. What's your name of the function? What are the responsibility? Are you in charge of the budget, for training for people? Because this is going to be your restrictions, right? Then the policies, the manuals, systems, all this stuff. What would be your approach?
My approach would be exactly the same. Firstly, read the agreement, understand what are your responsibilities and how much time you have to run away without, breaching anything. So that's the first step. Second step, read all of the policies and procedures. And afterwards, go into system and try to click as many buttons as you can without breaking anything. Because it's really, up to the fields and to check whatever is written in policies and procedures aligns with reality, how everything is set up. And unfortunately, I still see quite many cases when that's not the case, because you can have superficial high-level policies and procedures without the detailed explanation of how what works. And in those instances, you can have something what is completely contrary written in the policy as to the actual, setup which is implemented. And unfortunately, I still see it, on a day-to-day basis whenever engaging, in health check assessments or doing audits. That's an issue which there is in the market. So if you come in as a chief, compliance officer and you see that kind of discrepancy, you immediately need to rewrite whatever there is in the policies and adjust and actually ensure that whatever is in the system is compliant with how the regulation is set up. So there must be, that connection between the policies, procedures as such, and systems as they are set up, in order to ensure that you actually run operations and compliance operations in a manner which is adhering to the legislation. Otherwise, it's really easy, to slip and to make mistakes.
Yeah, I think that's exactly, final two questions.
Okay.
Problems with licensing in the UK, right? That's one. And second is financial promotions. What's your view on these two, let's say, critical aspects for crypto from the compliance angle?
So first question, registration and authorizations in the UK.
Why there is so few?
It's really tough. So if we would be speaking, about FCA right now, somewhat closing the gateway, to almost all of the market entrants, you will understand that. Imagine, okay, let's roll back a bit. So there was Brexit, right? There is a number of institutions in the UK which are working as payment institutions, e-money institutions, and all of them were working from UK, providing services to the European Union. There is Brexit, market shrank. So there is, abundance of institutions which are offering services, offered services prior to that to Europe through UK. Right now, we're confined to the UK borders. So there is that element, and regulators starting to understand, that something is wrong in the market. When they're starting to look at the market and we're seeing that, there's not enough controls in place. So there's that revamp, there is change of the CEO of FCA, there is change to the approach, and, FCA tightening the gateway because we're concerned that whatever market entrance we're going to approve, we're going to be providing services in the UK. So during that same period, whilst this was changing, you get crypto asset registration in the UK. When already FCA, they became more proactive, they even renamed their supervision department to enforcement department. So you have that element of FCA becoming more aggressive towards entities which were supervising, and you have crypto asset registrations. And, at that point, right now, FCA has, that element of additional secondary objective of international competitiveness, but at that point, there was none. So you have, consumers, UK citizens, who are based in the UK, and you have firms which want to offer crypto-related services in the UK. And you have FCA, which is first of all Financial Conduct Authority, and very just understanding, that there is that high risk investment, which is crypto assets, and there are those firms which want to exploit vulnerable customers in the United Kingdom. And at that point, the gateway, it was closed, so to say, from the beginning. If you're going to see the names of the institutions which got approved, they are quite well-known institutions. Right now, you have only like around 30 approved with overall last 12-month approval rate of 9%. So, 91% of applicants are either withdrawing their applications or getting a rejection from the FCA. And if we look at, first of all, another thing which is really important is just a registration for money laundering regulations, supervision with the FCA. Yeah. It's not an authorization. And, because of a setup in our countries, such as Estonia, let's say, you had registration with National Financial Intelligence Unit. In UK, you have it with Financial Conduct Authority and not NCA. So where's the difference? If you get registered by the FCA, you're gonna be seen as, as some may say authorized by the FCA. And there is still that issue that some people still consider it as somewhat authorization, but that's solely registration for money laundering supervision purposes.
I mean, from the consumer perspective, it doesn't change anything. I mean, if this is like, we can see the difference, right, between registration and licensing, and all this stuff, and who is the supervisory authority. Yeah. For the market, it's simply like, it's good enough to see that, okay, this is registered with FCA, that's perfect, It means that there is protection. So I completely agree with you that there is definitely, and there is a risk for reputation for FCA. That's another aspect, right?
Yeah. And, because of those concerns, FCA, they applied quite a lot of scrutiny and still apply quite a lot of scrutiny to whichever applicants. And, I would even compare crypto asset registration by difficulty to EMI authorization, because the level of detail which you must produce and the, number of documents which must be prepared for the application is somewhat at par. You also must have, business plan, which is quite strange. We're considering that it's only, registration for reporting suspicious activities under money laundering regulations. Because you have that assessment of people. FCA is doing interviews of people. They're checking, the knowledge of MLROs in order to supervise those type of businesses. And questions go into detail, also even asking, what's going to happen with crypto asset when it goes outside of, let's say, your wallet and it reaches wallet, which is unhosted wallet of the user. What's going to happen with crypto asset? So imagine this type of questions received by MLRO. Will you monitor it? Won't you monitor it? So there is a lot of, pressure on specifically MLROs of such applicants in order to reveal that they understand AML. At the same time, they need to also show that we understand risks related to crypto assets as such, because let's also not forget this registration. So handbook, not applicable, right?
Yeah.
And only right now, another topic which we wanted to discuss, financial promotions. They came into regime. And, that was really, really smart move, because in essence, what it did for the market of crypto as such, it, closed the gate for access to UK consumers. So firms from abroad, they cannot anymore sell crypto assets to UK consumers, because that falls under financial promotions regime.
And do you think it's good because it's protecting? But you can also see this as bad because then they don't have access to this type of assets, right? And then typically what is happening in this type of situation, it's not like you can close and nobody will know that there's Binance outside, or so like, and you can download application, that's another topic, because applications, that's another topic. It's actually quite difficult to put your application to the App Store right now, right? Even if you are let's say proper business, very difficult to add your payment crypto payment application to the App Store at the moment. So that's another aspect, because App Store don't want to be connected with crypto. So I don't think it's actually the financial promotion would be protecting anyone from accessing. I don't know if you can actually not promote Binance as crypto service provider without actually almost like selling alcohol by naming, providing, I don't know, Smirnoff, right? And you don't have to call this vodka, or encourage someone to drink. But if they got that, the choice will be Smirnoff, right? So it's almost like the same with Binance, right? Do you think it's actually protecting the market from this perspective?
So if we would be speaking about, rogue exchange, which don't care about, regulations, which provide services left and right without any kind of consideration for what laws can be broken during that time, whilst we offer those services, then yes, it does not do that much of a job, because still, even right now, I just remember I saw, some kind of headache, or not headache, I had a headache after I saw a heading stating that around, 230 exchanges are breaching financial promotion rules just a month after it went into force. So, where are those rogue exchanges which are providing services regardless of whatever is allowed or prohibited, right? So there is that aspect, yes. But, there is also the FCA, which is, trying to safeguard its consumers, trying to safeguard, its reputation as well. And we're naming and shaming already on exchanges which are providing services. So Bitfinex, for instance, it was named and shamed by the FCA. So, that, as that's one of the things which are available to the regulators as a, so to say, light touch enforcement action. At the same time, some exchanges, because they were not 100% compliant with the rules of FCA, they just pulled out of the UK and they're not offering services anymore in the UK. And at the same time, you have other exchanges which are regulated and authorized by the FCA and which are offering services on the local market. So consumer, having all of that in mind, he or she just may decide to go to a regulated exchange and offer and take services from that regulated exchange. Because you have even right now, Arcax, they offer financial promotions, basically approval services to other exchanges because they're an authorized institution. And you have those exchanges locally in the market, which, first of all, are authorized to provide services, and second of all, which have capability to do so. So why should you decide to go, to an offshore exchange and receive services from an offshore exchange when you can be protected? And in this case, I see that that's a correct approach and correct steps from the regulator, because they're, providing services within the local market, and they're restricting provision of the services within the local market and trying to protect the local market.
Okay, now I think this topic, there's another one, which is the travel rule, right? And right now, I don't know if you saw this, but in accordance with the UK local travel rule, Gemini will only permit outbound transfer to other registered trusted virtual asset service providers beginning November 17, which means that peer-to-peer transactions are being effectively excluded, which is, that's another aspect. And the UK, I don't know where UK is going with this. It's kind of crazy, because that, it's not going to happen for them if this is going to be the market. And I think UK should be at the moment should be the market for crypto. Right? There's all the rules which we can do and all the, let's say, legal framework, because effectively, the number of lawyers and advisors in the UK is, I think, is the largest in the world, right? That's, I think, it's third or second business in the UK, the legal and compliance, let's say, services. That's something which is critical. Georgie, I think we need to stop here. So this was excellent. Thank you very much for attending and sharing your knowledge with us. That was really good. Thank you.
Yeah, pleasure, Pavel. Thanks.
Crypto Compliance, brought to you by GateKnox.